Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Have a great show for you today based on the fact we had such a brutal sell-off yesterday from the inflation number. And guess what? This morning, we have another terrible inflation number, and it appears the futures are bouncing. So it looks like people are buying this dip. I think that's premature. I think we need to let the inflation narrative play out a little bit. So I don't think today is going to end up being this huge green day. But people are buying tech names. That's why you see Amazon and Apple are up. And I mean, I love that. But I'm not sure we're done shaking out all the weak hands. So what I mean by that is I believe there, and that's the topic for today, is there is a gambler's mindset that has snuck into the market. And this happens. And there's always a certain extent that it's in the market. But I think it has become one of the more mainstream events, especially, maybe some of the younger folks in the room resonate with this, but there's a combination of some things that, that have not happened before that have led to where I think we are. And during these sell-offs, especially yesterday, that's when you're shaking out the gamblers, right? And you're seeing the same thing happen in the crypto space. This morning, as soon as the Doge, or last night, the Doge father speaks ill of Bitcoin for energy mining, or energy costs to mine it. It's just like, did the CEO of Tesla really just throw spears about the use of electricity? Kind of funny. But anyhow, yeah, so he throws spears and $1/3 trillion of market cap are wiped out. So guess what? How'd that affect me? It didn't. How did it affect you? Probably didn't, unless you've got your coin wallet that just got slammed last night based off of his tweet, right? There's a lot of folks out there. There's a TikTok that's hilarious. I sent it to one of you, of guys screaming, watching their crypto crash after Elon Musk tweet. But the point of it is not about crypto, but it's about the gambler's mindset. And if you have a gambler's mindset in the stock market, you inevitably will end up chasing your tail and doing dumb things based on emotion instead of viewing the stock market for what it is. And that is business ownership. It is a mechanism for you who is probably an employee or a student or maybe a small business owner like myself, to be able to participate in business ownership of major conglomerates around the world. That's what the stock market is. It's not your latest whim. It's not a download the app and get $5 of free nonsense. It's not get a free stock because you download the, bruh, seriously, what are you doing if that's how you're treating it? If that's how you treat it, your buy and sell decisions are going to be emotional. They're not going to be based on, do I want to be part owner of Apple because of all the products and services they provide to society? That's a little different question than, oh my God, it's down 4%, let's sell. But so why? I made some notes this morning of maybe why this is. So we all sat in quarantine, for the most part, sat in quarantine for the better part of a year in 2020. I think that kind of started things with, since we're in quarantine, we don't have the normal human interaction that we have. So we're kind of seeking it, right? So I think that combined with social media starting to move into investing, not only with, gamified apps like Robinhood, but pages like avenues like Reddit and Wall Street Bets, and kind of a sense of belonging, and we're all in this together, and silly memes, diamond hands, paper hands, all of that stuff that was kind of running around. I think that's very attractive to folks from a social perspective of feeling a part of something. So you have that combined with, a lot of people lost their jobs and are sitting at home. Well, you need something to do. You will certainly fill your time with things. And I think a lot of people were entertained by this. I think a lot of people saw the crypto space as a way to participate in investing, where, I'm not sure it is. I'm not sure it isn't either, but certainly piling into a million different coins that are made up. The clear blue is more of a gambler's mindset than a investor's mindset. You could argue maybe it's pure speculation. I think it's still more gambling, the way people were looking at it. So, and then people, this is not a political commentary, but potentially being incentivized to not work with the employment benefits, being right there aligned with the amount that they would make if they actually went to work. But if you're going to make 90% of what you would get if you went to work, by staying home, why not stay home? That stuff will expire here eventually. But there's that. And then combined with the true stimmy checks, the stimulus checks. Folks are getting checks that's, free money, if you will. But for folks that needed it, that's what it was there for. So folks put it to work for paying, utilities and rent and things like that. But for those that didn't need it, could that have fueled the speculative nature of the market, or the gambling desire, or hey, let's throw some money into crypto, this is free money mentality anyway? So you've got all that stuff going on that has led me to believe that we're in kind of a complete gamification right now of the market. And when you see days like yesterday, everything sold off. So you would think if people were really worried about inflation, they would sell bonds basically and buy into gold. Gold went down yesterday. It's like everything went down yesterday. It was kind of these fire selling reminiscent, can't say that, reminding you of the period of selling off during COVID last year, where everything went down, right? It just crashed across the board. So why do I bring all this up? Let's talk definitions real quick. Obviously, we need to get to the open here. But the investing is the allocation of capital with the probability of gain and possibility of loss. So repeat that. Investing, probability of gain, possibility of loss. If you're gambling, it's the probability of loss with the possibility of gain. So it's a negative EV experience. So I think a lot of people are throwing a couple $100 into Dogecoin or Shiba Inu or whatever the latest one is. Computer Internet, I guess, is the new coin out that from a few days ago. It's really a gambler's mindset, no expectation for it to go upside, and it's fun. But I just cracks me up all the people that think they've discovered investing because they bought Dogecoin and wrote it up for 5 cents, right? And they doubled, or they tripled their money in a week, when it takes 5 years to triple your money in the market. They're like, why would I do that when I can just do this crypto stuff? Well, I think they're starting to see the end of that movie, or they're certainly starting to see how much that stuff can fluctuate, because it's kind of ridiculous there. So Apex, I see a couple of comments there. Yeah, I do not think Elon Musk is manipulating the market at all. I don't know. Why would he, right? If you're the richest person in the world, why would you manipulate a market? Right? It's kind of like back to remember when everybody thought PokerStars was manipulating the online gaming market, and the movie came out, Runner, which talked about those would be the last people in the world to manipulate something because they're benefiting from it. So, I don't think he is. I think he's speaking openly as he learns things. It was like, ooh, wow, maybe we don't need, 60% evidently of Bitcoin comes out of China. The labor conditions over there, the electricity usage, I could see how people are, Bitcoin's on the close of being, cancel culture, if you will, if people understood what went into getting the Bitcoin, right? So that's why I think, Bitcoin's not woke enough. Or another, some headlines, oh gosh, Elongelicals. That's another term I came across this morning that I thought was pretty awesome, of people that follow Elon tweets no matter what and just trade off of them. But no, I don't think he's manipulating. I think he's a smart individual, and he's making a commentary of like, ooh, I don't know if this is something we should be behind, right? Because there's a lot of negativity behind it. So I agree. Investing, long-term ownership, everybody can win if you participate. Gambling is a zero-sum game. So there have to be losers out there. And I will say, if you're mad because your portfolio sold off, 10, 5 figures or 6 figures yesterday, well, honestly, get over it, because the gamblers are the good for the game. So treat it, I don't necessarily like gambling analogies or poker analogies, but the poker environment, the poker world survives because of all the bad players. And honestly, in the market, you have, I don't call them bad players, but I call them asleep players, right? You have your 401k nation that has no clue what they're invested in, but they jam, if every individual out there is maxing out their 401k, they put $1,000 per person of the employed in this country, jams $1,000 of clueless money into the market every month, and with no clue. That's good for the game, right? Because if you're paying attention and you know what you're doing, you can capitalize on all that money that's flowing in that's really sound asleep. So it's not dead money or bad players like you would say in poker, but certainly it's asleep money. It's just there, and it has to get put to work by the money managers. So they end up having to buy stuff. So that leads overall to a market that can just continue to go higher until, you get yesterday, everybody gets spooked, and then we sell off all over the board. So anyhow, long commentary. We'll dispense with the video. Let's switch over to the lineup card for today. I'm talking about today, Thursday, May 13th. Standard disclaimer applies. Make sure you have your do your own due diligence for acting upon anything you hear this morning. A full disclaimer information is available at ototnow.com. All right, grow our money, protect our money, live off our money. I'm more in protect our money mode. I think this morning's, today's green is a little bit just people buying the dip prematurely. I'm in no hurry to buy anything. I'll buy Apple and Amazon, Google, Home Depot. I'll buy those if new money's flowing in, but I'm not certainly taking any big risk. Coinbase is on notice. Like seriously, it's like in a major timeout with me. They've got earnings after the bell. They're gone if that stock doesn't react appropriately, which doesn't mean it necessarily goes up. I do want to hear what they have to say about the long-term future, but certainly Coinbase on notice. All right. Long-term investing. How do you rid the market of gamblers and the casino mentality? People need to get crushed and they need to get hurt badly. Okay, that's an ugly thing to say, and it's a terrible soundbite, but that's what happens when people are not participating in the market for the right reasons. Okay, they get hurt, and that's unfortunate, but it needs to happen so people understand that this is not a casino. Your casino mentality does not play here. You need to pay it. This is for the long game, if you will. All right, the trifecta of earnings, I promised to get to that today because that's important. Long-term investments, I will say Apple and Amazon are up today. If you track I don't have time to pull up the charts, but if you track the VXX yesterday, the VXX went up huge. It was up 25% at some point. So again, if you're looking for ways to either hedge or be able to make money in a down market, VXX is your friend. It is a house of pain when the market goes higher. However, you make it all, it's the reverse, right? So markets tend to take the there's a stairwell up and the elevator down. The VXX is the opposite, is the absolute opposite. So don't do it if you don't like it. It takes the stairs down and then the elevator up. And then that's when you can lighten your position or cash out completely if you're a VXX type person. All right, we're 1 minute from the open. Bitcoin is selling off down like 13% today based off of Musk and the rest of he affected the entire crypto space. I did want to show you the futures real quick. I know we're getting close to the open. So futures in the green, Apple and Amazon shares rebound. We shall see if that holds. All right, as far as our trades today, I only have 2 longs for you, so we'll get those set up here. The longs are HRTX with a new drug, and then CSPR off of earnings. That's not CRISPR, that's Casper. People buying new mattresses, and we'll just put the VXX over here to see how that happens. If anything, you can short volatility today. All right, welcome everyone to the On Time, On Target Morning Brief. There is the opening bell. You see 4 screens in front of you. On the left-hand side, we see a 1-minute chart for the SPY, the S&P. So you can see that's up in the green after yesterday's sell-off. We have 2 longs for you today, HRTX and CSPR. That's Casper, not CRISPR Therapeutics, but Casper. So HRTX, the headline there is they have a new non-opioid painkiller out there. So again, if that's true, and you can back out a little bit, here's where you saw the reaction from there all the way up to there, and then settling in at up 4.4%. I do think that's an attractive headline, so I do want to trade this long. CSPR beat earnings. That's again Casper selling mattresses. And if you want to short the volatility, if you think today's a big green day, just short volatility all the way down, and it should get back down probably closer to 40 by the end of the day. But the trade I like with the 20-cent stop here is this HRTX trade. There we're starting to see some actual volume come in. Let's go 18.10 long. This is going to be a 25-cent stop. So 17.85 is where I'm targeting for the lower end if it holds, and 18.10 long. So there's our long 18.10. We're into the name with a 25-cent stop. Did I do the math right? No, yes. math right, 25-cent stop. So your lower stop is below the low of the day here at 17.85, not 86, but 85. So we're into it at 18.10. So if you had 25 cents, that's 35. Another 25 cents, that's 60. And then another one is up here at 18.85, slightly off the chart. See if we can get it here. 18.85 right there. And then we'll zoom back in, let go of this, zoom back in for everybody. So here's where we are. We're into the trade at 18.10, going long in HRTX on, again, their new non-opioid painkiller, I think showing a lot of promise. That's enough of a headline, I think, to take this thing higher. So, and again, if it hits 17.85, we are out. All right, let's see. CSPR looks like after the initial pop, it's kind of failing. Shorten the VIX, the mechanics of it. I would give yourself at least a 50-cent stop, maybe even $1 stop if you were going to get into shorting the VIX, just because of the VXX, just because it flops around all over the place. So careful of that. Remember, if this market turns around and goes red today, the VXX will go higher. But so far, so good. We're 3 minutes in, and we've got 3 green bars. So S&P is up 0.68. Looking at another screen right now. That means the NASDAQ has to be up well over 1%. So woohoo, the sell-off is over. Everything is going higher today. All right. So there we are. These dojis, if remember, that's what these are called in a candlestick. And I'm looking at HRTX here. These dojis are a good sign, meaning the stock's trying to sell off, but getting bought, going higher. Trying to sell off, getting bought, going higher. Same sort of thing. And it's bouncing off of this same resistance level, 17.9. So that's why, two things. That's good because that means there's a buyer down here that won't let this thing go down any further. Now, when that buy, why you set your stop here is because if that buyer gets exhausted, this thing could sell off hard. So I like it, but just realize if this doesn't hold, if this holds, then we're going to be fine. It'll march higher. If it doesn't hold, though, you need to be out right here because if you blink or if you don't have it set up, this thing could drop another 30 cents or so, and that would mess up your math, right? So you only want to lose the 1R when the trade works against you. So, all right. So let's see. In the overall market, have 3 moves up, and now we're starting to see some selling. Way too early to be able to call what the market's going to do, but we'll take a look. So, all right, have this set up. If you're in this trade, have it set up on another screen, and let's take a look at what's going on in the bigger picture here. Again, that's the 5-day of the SPY. So this was our most recent highs, whopping a couple days ago. So yeah, it could bounce. I don't think it's going to bounce significantly today, but we'll see. I don't know. Looks good so far. All right, DraftKings up nicely today. FireEye, thanks for the heads up earlier. Apex on cyber. Yeah, I agree. Since President Biden signed the emergency order cyber thing yesterday, I do think that is a good topic. I've done it before, but I can return to it. Again, what I prefer, instead of the individual company like FireEye, I prefer CIBR, which is the down here. If you can see that at the bottom there, which is the index fund, right? It holds FireEye, Palo Alto, and literally the other 100 names that are in the space. So with the executive order out there, I do think you're going to get a lot of money flowing in behind that. So, all right, Boeing up a couple of percent on news. I saw Apple bouncing around. If you've heard of Kathy Wood and the Wood stocks, which is, it's kind of a play on word with wood and stock, but Woodstock, ARKG and ARKK are names of hers. I do have some of that in the book. I don't buy into that. I generally inherit that and hold it largely because the gains make it unsellable because the capital gains are so much. So a lot of stuff bouncing around here. Again, DraftKings up at the top. Let's bring that chart real quick since Berner was talking about DraftKings the other day. Yeah, you're right. I would not like selling it down here. I do think it can run back up into the 60s. Remember, this thing was almost at 80 not too long ago. I still think, along with the theme of today, that the gamification of the market, people are at home, people are bored. I do think that that's real. And I think DraftKings is one of the best ways to invest in the human nature of, the gamblers. People, I can't say everybody's got a gambler inside of them because many of us don't, but I certainly did In my younger years. I thought gambling was great. I guess I will say I outgrew it. I don't want to offend gamblers of the world, but I have other uses of my time, I guess would be how I would say that. So yeah, I don't get any, dopamine hit from betting on a sports game or playing blackjack or craps or any of those other things. I don't get anything out of that. And I generally don't play that stuff unless I'm, doing it socially with folks. Tomorrow's briefing will be from Vegas, by the way. My oldest has a volleyball tournament there this weekend, so we fly out this evening. So enough on gambling and DraftKings. Let's look at what's down today, other than the VXX. Come on. Okay, some CBD stuff. Bitcoin, you knew, was down. Alibaba missed. They missed earnings, but they beat revenue. So kind of a mixed news story for Alibaba. So if I'm de-risking a portfolio, Alibaba is either already gone or on notice. Roblox has done nicely since earnings, so it's selling off a little bit today. Not too worried about that. Dip Shop, Chinese retailer name, that's just selling off because Baba is. Energy popped yesterday significantly. There's XLE. So again, not looking to buy into that here. All those names have run up big. If the gas shortage, if you've seen people putting gasoline in plastic bags and throwing them in the back of their truck, like what? Don't be dumb, people. And then the last one is Coin. We have Coinbase earnings today. I don't know what I expect. I just will sit there and brace for the number and then make decisions. I will listen to the conference call before I dump it. I do want to hear what leadership has to say about the future of the company and then make a decision on it. But it may well be gone as of tomorrow. We shall see. All right, here's our trade. Going back to the trade, it's hanging out right at the congestion of plus or minus an R. So I still like it. No reason to kill it here. So we'll just let it cook. All right, let's go back over to the main screen and I will talk about the earnings. So bring that back up. Let's get Investopedia earnings release. I should say report probably. All right, did not share this screen out yet, so let me get you to the right screen. There we go. We should be on the correct screen now. Okay, so what's an earning announcement? So, every quarter a company has release earnings. So like Alibaba last night, they released it obviously on Far East time, not on our time. So it happened in the middle of the night for US investors. And again, we own ADRs, which are a version of the stock, not the stock outright there. I looked at our trade. It looks like we did hit out of the trade. It went down to 1785. So out of HRTX for a 1 hour loss. All right, back to the earnings announcement. There's three things that happen. So when you think of accounting, and I know everybody hates accounting, right? But when you look at the profit and loss statement, you have the top line, which is revenue. That's all the money coming in. You have the bottom line, and that's profit. So they talk about right off the P&L. They talk about, okay, where are we with our revenue projections and all that money coming in? And then the bottom line is where are we with our profit projections? So when you think of a company like Amazon, as long as they were hitting their, they were unprofitable for 20 years basically. And companies can do that, right? And I see that now being a business owner of how you can manage that. Well, if you're in growth phase, like Amazon was, as long as your revenue is going up, you're making more and more each year, that makes sense that people would invest and your stock price would go up. Even though you're spending a ton, you're actually spending more than you're making. That means you're not profitable, but you're spending all that on infrastructure and employees and building out the company. So where I was hesitant initially to invest in companies that were not profitable, I see it now because the company could have made different decisions, right? So if you have Amazon who tried to be profitable, yep, -1R, I see that there, Apex, the in HRTX. If you see a company, if Amazon wanted to be profitable, their revenue would not have grown as much because they wouldn't have advertised and built out their infrastructure. So they could have been profitable, but you would not have made as much money in their stock because they would not have grown as much. So there's a lot of management that goes into profitability, where revenue is just dollars in the door. You can't manipulate dollars in the door. They are dollars in the door or they're not, right? So that's the first 2/3 of the earnings announcement are those two numbers, revenue and profit. The last number is the last thing that's measured is the forward guidance. So some companies don't provide guidance at all. Some companies provide guidance for 4 quarters out, which is more common. So they look at it and they would adjust that guidance, right? So based off of where we were, they now project out on, we had, and the reason 4 quarters is nice because a lot of companies are seasonal, like a Kohl's is obviously seasonal through the holidays. Disney seasonable through the summer. So their summer months they're going to make more than they are during the winter months, right? So this forward guidance going out a year is really kind of the kicker of what they're guiding up or down, is what you will say. So those are the 3 numbers that are coming out of it. The last thing is the conference call. That's where the executive suite takes to the microphone. Generally, the CFO, if you haven't listened to one of these, generally the CFO will start and say, all of the standard, give the numbers out, and then say all of the standard disclaimer stuff, future projections, and blah, 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 and then hand it over to the CEO for a few words of where the company's going and what they're thinking. And then from there, it's questions. You as the investor don't get to ask questions, but the analysts do that follow the company. So if they're in the crowd or virtual, whatever it is, they're there and they can ask these questions. And based on their answers you're getting out of leadership, that'll move the stock too. And again, that earnings call is about an hour after the actual numbers report. So people have the numbers programmed into algorithms, for Coinbase when it releases, half an hour after the bell today, depending on a few keywords in there, that'll start moving the stock all over the place. And then after that, you will hear the leadership team speak. And then that's harder to program an algorithm to trade off of, right? Because you have to actually listen to what they're saying, sort of thing. And my favorite story is listening to Zuckerberg in 2012, where I had sold the stock based off of I'd met my objectives with it and then bought it all back because he was saying some things that I'm like, if any of that's true, that's pretty impressive stuff. So I need to get back in on this. And obviously, I and others in the room have benefited greatly from that decision. So, all right, that's what I have for you today. Thanks you so much for checking in. Again, busted out of that trade, still hanging out around 18. Remember, don't take it again unless you're going to deal with wash sale stuff. With that, thanks for checking in. We'll talk to you tomorrow from Vegas. Have a good one.